Global currency markets are approaching a critical turning point. The dollar-yen pair is just below a major psychological level, and central bank decisions could determine its next move. Right now, the pair is trading near 158.90, still struggling to break above the 160 level. Ray Watterson here. Let's break down what's moving the markets today. The dollar-yen pair is facing a complex situation. The longer-term bullish trend remains intact, supported by the gap between US and Japanese bond yields, which continues to favor a stronger dollar. But in the short term, momentum is starting to slow as markets turn cautious ahead of two major central bank decisions. The Federal Reserve and the Bank of Japan are both set to announce policy updates, and the outcome could significantly impact currency markets. There is also growing concern about possible intervention from Japanese authorities. A weaker yen puts pressure on the Japanese economy, and officials have already signaled they are prepared to act if necessary. Markets are now preparing for several possible scenarios. In the first scenario, if the Federal Reserve maintains a hawkish stance, while the Bank of Japan remains accommodative, the dollar could strengthen further. In that case, the pair may finally break above the 160 level. However, such a move would likely increase the risk of intervention from Japanese authorities attempting to support the yen. In the second scenario, if the Federal Reserve signals a shift toward easing while the Bank of Japan turns more aggressive, the market could see a sharp reversal. This could push the pair lower, potentially toward the 155 level, as investors unwind carry trade positions. In the third scenario, if both central banks meet expectations without surprises, the market may enter a consolidation phase. In that case, the pair could trade within a relatively tight range between 158 and 159.75. From a technical perspective, several key levels are now in focus. On the upside, the main resistance zone sits between 159.50. As long as price remains below this area, upward momentum may stay limited. On the downside, immediate support is located near the short-term moving average, around 158.60. As long as price holds above this level, short-term bullish momentum remains intact. The most important zone to watch lies slightly lower. The area between 157.40 and 157.65 is acting as a major pivot. If buyers step in at this level, it would confirm that the overall uptrend remains strong. But if the pair breaks below this zone decisively, it could signal that the recent rally is losing strength and open the door for a deeper correction. With central bank decisions approaching and intervention risks building, the dollar-yen pair is entering a high volatility phase. For traders and investors, this means the next move could be fast and significant. If you enjoy clear and concise market updates like this, don't forget to subscribe and like the video. It helps the channel grow and keeps you ahead of the markets. I'm Ray Watterson. Stay sharp, stay informed, and I'll see you in the next update.